Hey, what's up everybody? Welcome to another Bueller Buys video. Today I'm going to be covering Fibonacci, retracement, and just Fibonacci in general on the bigger time frames and just how you should view it. And really just a good simple view. And this was a good video request by someone in the comments. Thank you again for the great video idea, and I'm glad to cover this, and hopefully it's not too long of a video. But let's jump into this. So in a simple breakdown, Fibonacci retracements can be thought of in a way of just really gathering a way of getting information to see who has control. Alright, so for any, let's say you have an important level here, whether it's a support or resistance, again, this can be used vice versa. So apply this for either direction. But let's say you see price, let's say this is again your support or resistance, and price is slowly pushing towards it, rejects it, whatever, and then consolidates for whatever amount of time and then pushes above it, right? A really awesome thing is to be able to point out, oh, from here to here before this point of slowdown, and then, oh, it slows down and holds this, you're able to point out who has control. Whether if they lose this support, then okay, then we know they're headed towards this major level that we were talking about beforehand. If they end up holding the support, okay, then we know there's a good chance they want to go at least test this high. Anything outside of this range, though, then we have to use external levels. Again, this is levels from bigger time frame, recent price action. Anything you can use. Price history, again, is really a big thing we like to use. But anything outside of that is really what you use for like targets. You can of course use anything inside of this range for a stop loss. Of course, if you're going for a bounce play here, setting a stop loss just outside of this is a great thing. Vice versa, for bears as well. So this is kind of the basics behind how we like these fibs, and I'll drop a link to a couple other videos to Fibonacci videos we've done on this channel, and I'll also release another one. So hopefully this helps you guys out. But let's jump into the kind of other way of thinking about fibs as we get into the rest of this video. Again, just in short, if your important level's here, you have an open range breakout above it. Let's say we're going to the upside in this example, and then you slow down at this point. Basically you're looking for bulls to continue having control as long as they hold this area. Whether that's them building base and then building a higher low and continuing up, whether that's them hitting it once and continuing up higher, you're going to have multiple variations. So keep that in mind too. It's not just as easy as touching it once and then moving up forward. You have to also have trust in your plan, and sometimes when you take base buys like that, you're going to have a stop loss just outside of it, and vice versa for downside. But in short, again, just in short, looking for continued bullish control if they hold this, looking for a failed invalidated bullish move if they fail under there and show either one pullback, whatever, they show a higher low, and then whatever kind of move here, or lower high, sorry, and then a continuation to break that support, whatever end up leading after that. Again, we talk about that in the video, but I just wanted to be sure I was clear on that. So for the bigger time frame example that I wanted to go over with you all, again, the request was for bigger time frames, so you can do this for weekly, monthly, yearly, daily, whatever bigger time frame you're focused on, 4 hour, 1 hour, whatever you're focused on. I'm going to apply this to the daily time frame just for a good vague view for you, and then you can apply this to whatever time frame you prefer. Again, everybody has their own personal preference. So this is a really awesome way that I like to look at fibs when we look at things. So I'm going to start with recent price action, from what we've recently seen, and you could see there's a clear level of resistance here, where price is pushed up, hit, slowed down price, and then you could see even as price recovered and bounced back up, it slowed down against it, rejected it, and then you can see price slowly getting above it, building lower highs, and then getting higher lows and getting higher back above this, holding control of it and getting back over it. But how could you accurately view this, without making anything up? And again, giving yourself constant variables, consistent variables, nothing that moves on you or nothing that's going to be inconsistent in the future or going to change on you depending on whatever the situation is. Again, if something moves on you or is inconsistent, then you probably shouldn't be using it over and over. But let's get into why, or what could you have done, or what could you have seen to help you see over this move. So we've already pointed out important resistance, right? We've seen price slowly push over this. We've seen price slowly, slow down really, and then reject and pull back down. But what else happened down over here? Of course, over here we see higher lows were made. We see price slowly take control and push higher. But what really happened here? So let's get an accurate view of what happened here. So like I showed you guys in the kind of, I know I'm an amazing artist, but the free hand drawing I did there to kind of give you a better view of what's going on here. So let's do that. Let's go from the point of breakout. And what I'm about to show you is really cool because I'm going to show you a view of this that doesn't work out and you see them lose control. And then we're going to see another view of this where they do hold control and take advantage of this and push higher. So, and of course, this can be used for either direction. Of course, I'm just showing you the upside for this exact example here. But of course, we can do more videos. But let's go over this one. So let's go over the breakout here. You can see, so from over the breakout, we go to the point of the slowdown. Where did price actually stop? Price actually stopped here before they finally gave us a red candle. And what happened here? Let's zoom in a little bit more. Price pushed up. They finally gave us our high, you could say, and they pulled down and they rejected under the control point, or the halfway point, a lot of us like to say, the 50% fib, and then under the golden pocket, a very, very awesome bounce fib we like to look for in combination with the halfway point. You could see they pulled down, held the 100%, ended up stopping there. It didn't quite close under. What did the next day do? They ended up rejecting, adding even more confirmation for bears to potentially either pull this back down if bulls do not end up holding over this 100% fib. Again, the about a 418.30s area. Looks like about 418. Next day, they open lower, instantly giving confirmation that bears are in control as long as they're under 418.30s. Again, very good, awesome confirmation for bears. But on the bull side, not really good, awesome confirmation. They ended up losing a lot of ground here, ended up seeing a lot of ground taken back by the bears. So let's take all this back out. Actually, re-add that. Re-add that level, re-add that fib, and then let's zoom on over to here, and let's see what happened. So we're going to add that same exact level again. Again, where did we slow down? That exact resistance right there. Just like we did here, we're going to add that resistance here, right? So let's add this high just to have it for the notable future. Again, may see it tested, may not. We'll see. But let's keep that same fib we had up again from where we had the point of the breakout to the first slowdown. And let's see, can they get control of it? They seem to have lost it here, couldn't get it here. Either further confirmation to show bears took control to take it back. Again, completely losing control of this from the get-go. So let's see what they do on the second try. So price ends up pushing. We get a higher open, looks like a bullish kicker. Vice versa. It's kind of weird too. You get a bearish kicker, and then you get a as you're exiting, and then as you're entering the zone again, you get a bullish kicker. So very interesting. So very, very aggressive price action in this area as they're exiting and entering this area. So again, just kind of notable information. But what do they do though? They end up holding into this area, but they don't quite make a new high or close a new high. All right, so they're short-term in control, but didn't quite take anything that take anything new, at least from what they did before. Price ends up opening higher, a potentially good sign. Again, at that moment in time, we're thinking, all right, as long as we hold 420.70s, bulls are in control. They end up failing. They end up pulling back into range. We're pretty much in the same seat as we were the day before. Next day opens lower. They end up leaving this range entirely. Okay, well, we're still in the same seat as we were before technically because they already exited range here, and we haven't been re-given the signal to say, hey, we're bullish again. We just saw some short-term control inside of the range, no new ground gained, potentially, again, saying that no bulls are here yet. What do we end up getting? So after this lower open, lower close, we end up getting a higher open, higher close, and they finally show us exiting confirmation after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days after breaking this resistance. Again, 10 days. Again, just showing penetration and then actual control over, which sometimes, again, this takes 2 days, 3 days, 4 days, 5 days. But in this example, again, you're seeing 10 days and seeing just how long it can possibly take. Again, this is why patience really is everything. But you can see finally giving confirmation that bulls are in control. And then what do they end up doing after they're finally in control? They move higher. Awesome move. They end up getting a higher open, a completely big move through another psychological level. You can see 425 here. They make it all the way through 426, 427.50. They're all the way through 428. They almost made it to 430 in this one single day. That's crazy, right? So let's go from that resistance. Again, you can see kind of had trouble from this resistance here, right? Let's go to where we slowed down. You can see the first red candle appeared about here. So again, kind of moving further continuation into this scenario here. Again, just kind of breaking down the chart further. Essentially saying as long as we hold these two areas, we should be bullish. What do we end up doing over the next few days? We end up holding over this area. We get a higher open that closes outside of the range. And what do we get? A continuation further. So what do we have moving forward? You can go from that resistance, again, from where we had our slowdown. We'll go to where we had our first slowdown, the high, before our first red candle finally appeared. So essentially, again, kind of telling us that, again, if we can hold above 436.76 or 434.62 in this general area, then we should be continuing higher. Bulls are still in control. Again, if we end up losing this, there's a good chance we either go to fill this gap. Right here, you can see here. Go to fill this gap. Go to touch the 100% fib. And then that's all the information we have that is at least almost fully confident before moving outside of this range. Again, if they move outside of this range, there's no telling how far they want to pull back. They could pull this back, wick it back up, take us back into range, or vice versa. On the other side, if they end up closing out, they could wick it back down, keep us in range. You're not as confident, especially with outside, unless you have outside information. Again, using your price history, whether that's going out to the bigger time frames, marking price history, emerging candles, having this ready for an outside of the range kind of move. Just using the weekly here for a quick example here. Go back to that. Where are we at? The daily. You can see the daily here. So it's like, outside of this range. Okay, well, above 443, let's watch 446. Above 446, let's watch 450.25. And vice versa. Outside of this 100% fib, let's watch, the old fib that was trying to hold as support. And outside of that, we'll watch 420.70s. We'll watch whatever other levels are there. There's always another plan, regardless of where price goes or what kind of news hits or what moves the stock or where it ends up moving. So, again, just kind of using these fibs to give you some extra information. Hopefully this isn't too much or too complex. Again, hopefully I broke it down in a decent manner where it's not too much. Again, this is a very basic use of fibs, in my opinion. This is just, again, watching open range breakout moves is really all you're doing, marking them and then kind of going off of consistent fibs of them. Again, the halfway point, a very useful fib, as well as the golden pocket, very useful, very popular as well. So again, hopefully some of this information in this video helps. If it doesn't, maybe we can do another one. Let me know if you guys want to get another breakdown of this. Let me know. But hopefully you enjoy it. Drop a like on the video. Drop a comment if you want some more. And yeah, I'll see you guys in the next one. Thank you.